0.9% this year. The deepest contractions are expected in the second quarter of 2020, with gradual recoveries in the third and fourth quarters of the year. The strength of the global economic recovery will depend in part on the control of new virus outbreaks, the extent of supply and demand losses, and expectations of future growth in investment and productivity. The crisis has caused extreme volatility in financial asset prices, with sharp and deep market sell-offs followed by a partial recovery. Investor appetite has generally improved, reflected in a weaker US dollar and strong flows to emerging markets. However, the general environment continues to reflect pronounced levels of risk aversion due to uncertainty about future global economic prospects. Policy responses to the crisis have generally been robust. This week, the European Union agreed to a large targeted stimulus package primarily to support investment. Other monetary and police and fiscal authorities continue to provide accommodation and support. Emerging and developing economies are generally constrained by less policy space, currency risks, and tight global financial conditions. The international financial institutions continue to make available extraordinary levels of emergency financial support to respond to the pandemic. The COVID-19 outbreak has major health, social, and economic impacts, presenting challenges in forecasting domestic and global economic activity. The compilation of accurate economic statistics will also remain severely challenged. Our second quarter estimate for output has been revised lower. The bank currently expects GDP in 2020 to contract by 7.3% compared to 7% contraction forecast in May. Even as the lockdown is relaxed in coming months, for the year as a whole, investment, exports, and imports are expected to decline sharply. Job losses are also expected to rise further. Easing of the lockdown has supported growth in recent weeks, and high-frequency activity indicators show a pickup in spending from extremely low levels. However, getting back to pre-pandemic activity levels will take time. GDP is expected to grow by 3.7% in 2021 and by 2.8% in 2022. South Africa's terms of trade and commodity export prices remain high. While oil prices are generally low, they have increased since the May meeting. The Brent crude oil price is expected to average about $40 per barrel in 2020, rising to $45 per barrel in 2021 and $50 per barrel in 2022. Exceptionally accommodative policies and the relaxation of lockdowns in many advanced economies have supported a partial recovery in global financial markets. However, financing conditions for emerging markets remain uncertain, contributing to currency weakness. The rand has depreciated by 15.2% against the US dollar since January and appreciated by 8.8% since the May meeting of the MPC. The implied starting point for the rand forecast is 17 rands 93 cents to the US dollar, compared with 18 rands 40 at the time of the previous crisis. Resident investors have increased purchases of long-term bonds, helping to ease yields in recent weeks. However, the yield curve is exceptionally steep, reflecting credit risk associated with high public borrowing needs. The bank's headline consumer price inflation forecast averages 3.4% in 2020 and is marginally lower than previously forecast at 4.3% in 2021 and 2022. The average for core inflation is lower at 3.3% in 2020, remaining broadly stable at 3.9% in 2021 and 4.1% in 2022. The overall risks to the inflation outlook at this time appear to be balanced. Global producer price and food inflation have bottomed out. Local food price inflation is expected to remain contained. Risks to inflation from currency depreciation are expected to stay muted, while pass-through remains low. However, electricity and other administered prices are still a concern. Upside risks to inflation would also emerge from heightened fiscal risk and sharp reductions in the supply of goods and services. Long-term inflation expectations remain higher. Despite sustained higher levels of problem. It is within target and it is close to the midpoint of our inflation target range, which is where we would like to see it. Of course, investors do also want to be compensated for taking risks over a longer period of time. And the reason why the yield curve rises over that period is reflective of that. But there is a dynamic in the South African capital market space. And it has to do with how steep our yield curve is compared to country peers. And what that could be reflecting is a concern about the state of public finances and future borrowings. And I think that it is in that space that you had the Minister of Finance talk about fiscal consolidation, because as an issuer, you don't control the price. The only thing you control is the quantity that you borrow. And if you would like to then see lower borrowing costs in the future, you have got to contain the borrowing. And that is the job of the ladies and gentlemen down the road at the national what does this mean? This yield curve mean for monetary policy? Monetary policy, remember, is by its nature cyclical, and it affects activity around the cycle. And what we have seen is that because there has been a very aggressive relaxation of monetary policy, what you have had is that short-term rates declined way faster than long-term rates. And that is to be expected when you relax monetary policy. What this means is that borrowers could take advantage of these low short-term rates. And one important borrower did exactly that. We have seen that the National Treasury has shifted its issuance to the short end of the yield curve because it is cheaper for them to borrow at those levels. And that in itself meant that the transmission of our monetary policy actions had been to the very rapid benefit of the fiscal authorities. What it means for future fiscal policy, again, you can talk to the ladies and gentlemen down the road. But Mfuneko, you had also asked the question about deflation. If there was the markets were pricing in deflation, the yield curve wouldn't have been steep. The yield curve would have inverted because that would have meant that the investors are expecting that inflation will be so low in the future. So buy the bonds now so that you can benefit from the capital appreciation. So the South African bond market is not pricing for deflation. And deflation is not in our base case as it stands. It's not even in an alternative scenario at the moment for us. Yes, inflation has come down, Mfuneko, but that is disinflation rather than deflation. Disinflation means that you are having inflation growing at a slower pace than in the previous periods, whereas deflation means that prices have turned negative, and that is not what we are seeing in the South African economic space at the moment. I think I have dealt with all the questions. MPC members, if there is anything I have missed or anything that you would like to add, please feel free to do so.
So, Governor, I wanted to just add 1 or 2 points. So just to remind, I think, colleagues about the fact that the bond buying program is part of our monetary policy portfolio, which is a monetary implementation tool that we utilize. And one thing that we have also emphasized in the past is that this is a two-way tool. So the toolkit is there to add liquidity to the market and also to drain liquidity from the market. And this is going to be a longer term tool that the SARB will be utilizing as part of the monetary policy implementation framework. The second issue I wanted to highlight regarding the participation of foreigners in the South African capital is that as long as we don't have sufficient domestic savings to fund our investment needs and to fund the needs of our domestic market, we will continue to need foreign participation in the domestic market because we would be accessing those foreign savings. So if we do not have sufficient savings in the domestic market to fund the needs of both government and the corporate sector, it's going to be quite important that in the future we continue to have foreign investors. Otherwise, if we have one of the players taking up all of the national savings, we will end up with a crowding out of another player. So if, for example, government were to access all of the national savings, then it would mean there is not sufficient capital for corporate investors. Thanks, Governor. I don't know if we answered Fifi's question about corporate bonds. Did we answer that?
No,
I actually wanted
okay. So
from the governor. Yeah, thank you.
So let me talk about that quickly, Fifi. So the instruments that we consider in our participation as a SARB in the bond market, if you will recall, was to restore market functioning. And the reason why we are buying government bonds is to restore functioning in the government bond market because it is the largest bond market in the country. So unlike in the United States, where the corporate bond market is quite large, the South African corporate bond market is quite small, and the instruments that are sold there are not very liquid. Some of them are private placements, and some of the instruments are bought and held by the banks. So if you have an instrument like that, that's not very liquid. When you buy it as a central bank, as part of your portfolio, then you have challenges in terms of how you can utilize that instrument in the way that I described earlier to add liquidity to the market and to drain liquidity to the market. So we have had discussions with corporate treasurers and with various market participants about this issue, but at this stage, our corporate bond market is not at that level of maturity. Thank you.
Thank you. And then Lamis asked a question about when was the repo rate this low. The current repo system was introduced in 1998, and as of the May meeting, the repo rate was at its lowest since the system was introduced. So what we have done today is that we have taken it even lower than that. Okay. Any other questions?
Governor, there's one question from Miriam Isa on the chat line. Maybe I can just answer it.
Deal with it then, sir.
Yeah, the question is, why is it that the starting point for the exchange rate is 17 Rand, whatever, rather than the spot price of the exchange rate, which is 16 Rand 60? Just to say to Miriam, it would be very dangerous for us to use the spot price in a variable that moves hour by hour or day by day. Typically, what happens is that we average it out in the past, and this is relevant now too. We average out relative to the last MPC meeting over a period of time, anywhere from 1 month to 3 months. So using the spot price would be methodologically not appropriate. The idea is to take a period of time because you'll get good days, you get bad days, and the averaging process is what matters for the starting point. Thank you.
Okay, and Miriam, just add to say that this is an implied starting point. So it's derived from the nominal effective exchange rate. So that is how we arrived at this thing. We do not extract this figure directly from the markets. Okay. Mfuneko,
Hi, Governor, thanks.
just a follow-up question.
Yes, sort of. The first one is, are you just able to explain to us what, if any, coordination that happens with National Treasury, considering the extraordinary circumstances that have been triggered by COVID-19, and whether or not this coordination happens within the parameters of the MPC or outside the parameters of the MPC? And then just the second question is, has the bank observed sort of any disruption in the bond market due to distress at state-owned companies that issue significant amounts of debt? Thanks.
Okay, so that was the last question. Okay, thank you very much, Mfuneko. Prinesha, you have another question?
Yes, Governor, I just wanted to clarify. Did you say that we have reached the end or are nearing the end of the easing cycle?
I didn't talk about any cycle.
Can you please let us know then?
I will leave that to Rashad.
And sorry, so just one last from me, just to add to Mfuneko's point about SOE bonds, particularly the distressed ones, the conversations there then that the SARB is having to potentially support those. Are such talks taking place? Thanks, sir.
Okay, Rashad, shall we start with you and the cycle?
Yeah, thank you very much, Governor. Look, it goes back to Lucanio's question. There's the question of what the model says, and what the model says. We're not really talking of a cycle. We've been saying repeatedly that the numbers are incredibly uncertain. As we go from meeting to meeting, we want to be very more confident about what we think both the direction of GDP is and the direction of inflation. And once we kind of have a better sense of this, we factor in the data and decide whether to keep unchanged or not. And I think that's really as much as we can say. Thank you.
Thank you very much. The thing about SOEs have to raise money. They can get into the market. And as Fundi spelled out, when we talk of the corporate bond market, by the way, in South Africa, the corporate bond market is dominated by the state-owned corporations. And so what DG Chasivana said about the illiquidity of the bond market would apply to the SOCs as well. Mfuneko, coordination with the National Treasury and whether it takes place within the context of the MPC. The MPC is the MPC and it discusses monetary policy. It is an internal committee of the bank. It does not have representation of the Treasury. Whether you are in a crisis or not, the coordination of macroeconomic policy is important. And macroeconomic policy in this instance, two important components is fiscal and monetary policy. And as we have spelled out in the earlier questions about what is going to happen to these inflows that we had bought and what the Reserve Bank does about it is what you talk about when you talk of coordination. We have got formalized committees between the Reserve Bank and the Treasury to coordinate our activities. There is a standing committee on macroeconomic policy, which is co-chaired by Chris Lowald and the head of economic policy in the National Treasury. And there is a financial regulatory issues committee, which is co-chaired by Deputy Governor Naidu and the Deputy DG in the Treasury responsible for financial sector policy. And there is a standing committee on banking and financial markets, which is co-chaired by Deputy Governor Chasibana and the DG of the National Treasury. And then there is a standing committee on international matters, which coordinates our activities in engaging with international financial institutions and the various bodies through which in which South Africa participates. That is the nature of the coalition. Let me just underline this. That there is coordination does not mean that one of the authorities encroaches on the mandate of the other. The South African Reserve Bank is responsible for monetary policy, and whatever we do that reinforces what the Treasury does is the decision of the South African Reserve Bank, and it would always be done in accordance with our mandate. And without a doubt, the National Treasury and broader government make decisions about fiscal policy. It is for them to make those decisions and not for us as the bank. And that is the nature of the coordination. Well, thank you very much for your participation in this virtual press conference. We will see you again in September. Thank you very much and have a very good day.
Thank you.